To the Prince Pipes and Fittings Limited earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Srivastava from Batlivala and Karani Securities. Thank you. Over to you, sir.
Yeah, thank you, Doyle. Good morning, everyone. On behalf of BNK Securities, welcome you all to the Q3FY23 earnings conference call of Prince Pipes and Fittings Limited. We have with us from the management Mr. Parag Chheda, Joint Managing Director, Mr. Nihar Chheda, Vice President of Strategy, Mr. Shyam Sarda, CFO, and Mr. Anand Gupta, Deputy CFO. We would start the call with the opening remarks from management, which will be followed by Q&A. Over to you, sir.
Yeah, thank you, Amit. Thank you all for joining us today. The presentation and the press release have been issued to the stock exchanges and uploaded on our website. I trust you have been able to review the same. I will cover a brief overview of the industry and then discuss the company level performance. As you are aware, we continue to see pressure on PVC prices for the first 2 months of the quarter. Since April 2022, PVC prices corrected by an unprecedented 66 rupees per kg, which is nearly the price of resin itself, and bottomed out at about 76 rupees per kg by November end. The trend reversed in December, leading to improvement in market sentiments and channel restocking. Affordable rates, supported by underlying demand momentum, delivered healthy growth momentum across all sectors of real estate, agriculture, and infrastructure. Largely, the overall industry sentiments are buoyant across all sectors. As per Economic Survey 2023, housing prices have started to firm up after a 2-year COVID lull and demand has stabilized. New construction is picking up pace, which has stimulated innumerable backward and forward linkages within the construction sector. This holds a good bearing on the building material industry, and we see this trend being stable. These are exciting times for the Indian economy, which has already taken center stage at the global level. Strengthening water infrastructure, housing, agriculture have emerged as key themes and the mission of the central government. The Union Budget 23-24 has outlined initiatives to stimulate this momentum, with Jal Jeevan Mission budgeted allocation increased by 27% to rupees 69,684 crores. The mission envisages providing piped water to each rural household by 2024. PM Awas Yojana has allocated over 79,000 crores, which is 65% higher compared to last year, boosting the Housing for All mission. Such initiatives will positively impact industry progression. It is noteworthy that the significant increase in allocation for capex spending by 33% to rupees 10 lakh crores conveys the government's intent on ensuring that the infrastructure acts as a force multiplier for India's path to inclusive prosperity. Real estate, building materials, infrastructure, and ancillary industries look to benefit from this capex push. This higher thrust on capex is at a time when private capex is yet to reflect credible signs of revival and is a step to stimulate the private capex environment. I'm happy to share that this quarter we achieved a very strong 35% volume growth. The company sold 43,693 metric tons of goods and achieved revenue of 706 crores during this quarter. We witnessed respectable rebound in margins this quarter, which we believe will further improve in quarter 4. Our focus continues to be on innovation and market expansion as we launched 2 key products with superior German technology in modern plumbing division, which marks the beginning of new growth trajectory. We understand India's evolving needs, and with the launch of premium line of products, we are bringing home the finest in manufacturing, design, and end-to-end solution to offer high-performance drainage and piping solutions to builders, homeowners, and consultants across India. We maintain fiscal prudence and remain long-term debt-free. Our net working capital has improved to 44 days as of December 22 from 68 days in September 22. At Prince, sustainable growth is the heart of our organization progress. I am proud to share that our Haridwar plant has won the IM Excel Commitment Prize by Kaizen Hansai for a greater effort towards building a sustainable and world-class ecosystem. We are also awarded the Certificate of Merit in Believers category Sustainability 4.0 Awards by Frost & Sullivan. Our sustainability practices have reduced carbon footprint, increased recycling, and accelerated the use of renewable energy. On an overall basis, we continue to be bullish in the medium to long-term prospects of the industry with the government's growth-oriented stance. India was recognized as the 5th largest economy in the world last year. Evidently, the opportunities within India are significant. Our business fundamentals continue to be strong as we focus on implementing growth strategies centered on utilizing existing capacities, expanding our distribution network, premiumizing the brand, deeper market penetration, and optimizing our product mix towards high value-added margin products. We will continue to ensure strong execution of our 3-pronged business strategy centered on organic growth, operational excellence, ESG-aligned progress, and thus steer the organization to provide great value to all our stakeholders. Thank you for your time and mindshare. I will now hand it over to Anand Gupta, our Deputy CFO, to take you through the key financial highlights.
Thank you, Parag Bhai, and good morning, friends. I'll be taking you through the quarter 3 financial 23 financials. In this quarter, company saw a revenue growth of 6% YOY at rupees 706 crores compared to 664 crores in Q3 FY22, led by very healthy volume growth across segments. Our volume grew by 35% at 43,693 metric tons. EBITDA stood at 69 crores for Q3 compared to 111 crores in Q3 FY22. EBITDA margin recovered quarter on quarter and stood at 9.8% for this quarter. Further, our finance cost reduced by around 50% due to decline in short-term borrowing. Profit after tax stands at rupees 35 crores compared to 67 crores in quarter 3 FY22. Our average realization have been very healthy as we continue to maintain our focus on our core strength, which is SWR and plumbing segment. Agri segment helps us drive cost absorption and unlock cross-selling opportunities. Commenting on working capital, inventory days improved from 85 days in March to 61 days in December 22. Debtor days from 60 days in March to 48 days in December 22, and which we are working upon to further reduce and improve the credit cycle. With this, we would like to open the floor for questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Pranav from Equirus Securities. Please go ahead.
Yes, sir. Good morning. Thank you for taking my question. Sir, I wanted to understand your strategy on the bathware segment. So, where are we standing as of now? Because you had announced that you have moved into the bathware segment, I think 2 quarters back. So, where are we standing in this, and how are we strategizing for increasing the share of, let's say, overhead water tanks as well as the fitting business?
Thank you, Pranav. So on bathware, I would like to take this opportunity to give everyone an update. I think we have finalized our designs as well as shortlisted our outsourced partners for both the CP fitting and the sanitary divisions of the bathware segment. We are in the process of finalizing the cost structures as well as the pricing that we would offer to the market. And I think as we had guided, by March or April, we would be able to launch to the market our entire range of bathware products. The team down the line is being hired, and we have made some progress on that. And the next quarter, most of the state head positions should be in place, which will help us build a strong team for the overall bathware vertical. Coming to storage tanks, I think we have seen good growth from last year. Of course, the base is small, so the percentage growth would always look good. But I think we have, as we have always guided with water tanks, that we need to be patient in this business. It's more of a 3 to 5 year strategy before it really starts impacting our overall revenues. But the product acceptability has been excellent across markets. We have in-house manufacturing in the Jaipur and Silvassa plant. We have also started now manufacturing water tanks at the Hyderabad facility. And the rest of the market is catered to through outsourced partners, and we have seen a very good acceptance of the product, and we will continue to steadily grow the water tanks business, leveraging the cross-selling opportunities across our distribution network. Thank you.
Okay, sir. And what about, sir, the PVC fittings business?
The PVC fittings business?
Yes, sir.
Yeah, what about that? What is the question?
So, sir, how is that performing, and how are you strategizing on, let's say, increasing the contribution from value-added products in that segment?
So, see, PVC fittings is a basket selling with PVC pipes. We have been in the PVC fitting market for 4 decades now, and we are one of the leaders in the PVC pipe and fitting industry, as everyone knows. I think the new products that we have launched, or the value-added products, of course, in CPVC we have a tie-up with FlowGuard Plus. PPR is a value-added product for us, which we have been present in for more than 2 decades. We have also launched 2 products in the 2 products in the modern plumbing division, through two partnerships with German companies Ostendorf and Horaton, which we are extremely excited about as we focus on more innovative products and then try to drive innovation in the industry. So that's where we are.
Okay, sir. And sir, my next question was related to how the demand you're expecting to pan out in 4Q, because 3Q also actually saw kind of restocking at dealer level because of December seeing all the price correction getting wiped off in PVC segment. So are you seeing 4Q to be somewhat muted versus 3Q volumes because of this sudden spot in the demand, or you think that both Resi and Agri would be able to more than cope up and give you sequentially also very good set of numbers?
So firstly, it's early days, right? So I think I would stay away from talking about how the overall quarter is going to go. We continue to be optimistic because, as you're aware, for the building material part, I think real estate is doing well. There can be, short-term challenges, but I think next 1 to 2 years, at least, I think real estate will do well. The data is, out in the open, and whatever ground level interactions that we've had with builders and architects across the country has been extremely encouraging. So I continue to believe that, next 4 to 6 quarters will be strong for building material, which is plumbing and SWR, which is 2/3 of my portfolio. And 1/3 of our portfolio, which is Agri, I think PVC is affordable today. And past 2 years of Agri has been weak for the industry. So Agri will also continue to do well. So overall, we are optimistic about both end user segments, plumbing as well as Agri. Of course, we have to be realistic that December quarter, the kind of 35% volume growth that we've had, of course, restocking has been a part of it because the channel was empty for the first 6 months of the year. So 35% volume growth is not something we're going to see continuously for the next 4 or 6 quarters. This, it was driven by both genuine demand as well as restocking. And restocking, of course, I think now channel inventory is closer to the normal inventory days today than it was at the beginning of December quarter. So I think we can see a healthy growth for the industry now because volatility of PVC actually is behind us. I think PVC will be stable, will be range bound. So I think we are back to normal. The worst is behind us, and we should be back on a growth trajectory, a healthy growth and a sustainable growth trajectory.
Sure, sir. Okay, thank you very much.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, we request you to please limit your questions to 2 per participant. The next question is from the line of Shrenik Bachawat from LIC Asset Management. Please go ahead.
Hello, am I audible?
So the volume is a little low. If you could please speak closer to the mic.
Yeah. Hello.
A little better, sir.
Yeah, thanks for the opportunity. So my first question is, could you quantify the inventory loss for this quarter? First question, and the second question, can you throw some light on, do we supply materials for Jal Jeevan Mission, and is it big for us?
Thank you, Shrenik. I think the overall inventory loss, since we are importers of PVC and mainly a PVC player. So inventory loss was around 25 to 30 crores for the December quarter. So significantly less than the September quarter. And like I said, the worst is behind us, and all the high cost inventory has been consumed in the past quarter. So I think that is now behind us. So that is to answer the first part of the question, 25 to 30 crores. And can you repeat the second part of the question?
Do we supply materials for Jal Jeevan Mission?
Jal Jeevan Mission is, so we have seen some demand from some pockets. In PVC we have participated. HDP we are not that keen because of the extremely paper thin margins. But PVC, wherever there has been opportunity, we have participated. we are very clear as an organization that Jal Jeevan Mission is good for the industry. It can be a growth driver for the industry, but it is not going to be a primary driver for growth because it's something that we cannot trust whether it will be consistent or not month on month, quarter on quarter. So I don't see Jal Jeevan Mission as a sustainable growth driver. It will be third or fourth driver for growth, but primary driver for growth has to be driven from real estate, agriculture, network expansion, and newer products that we are coming into within piping segment.
And just last question. So I believe agri season has already started. So how is the agri demand performance been Jan and Feb till now?
I think December we saw some good agri sales, and affordability is back. So I think agri should be good towards the end of this quarter and in the first quarter. As you are aware, agri is around 30% of our business. So I think that part of the business should do well, given that affordability is back and past 2 years of agri have not been very good. So I think agri should do well at an industry level.
Okay. And just last question, on the Telangana plant, how has been the progress over there? What is the current capacity that we are running at the Telangana plant, and all the products are in place? Can you just enlighten us about the Telangana plant?
So Telangana, we have been able to put up the capacity approximately 50,000 tons. Initial response has been very good. We have, as you are aware, South India is a focus market for Prince Pipes today.
Yeah.
Having a local plant, we are already seeing the green shoots of having a lower freight structure and a local supply chain. Of course, capacity utilization is still early days. Will take a few quarters to really ramp up, but we are on track as to what we had internally projected.
Great. Thank you so much for your answer.
Thank you, Shan.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead. So the line for you has been...
Hello.
Please go ahead, sir.
Yeah, I just wanted to know that what kind of volume outlook are you looking for FY24? I believe you said that you are looking at a 12 to 14% margins on a sustainable basis. So what would be the volume growth that you are looking at for the next fiscal?
So I think volume growth so we usually stay away from giving quantitative guidances, but I think given all the tailwinds that we have today in terms of affordability of PVC, strong real estate market, like I said, agri should be doing well. So that's at an industry level, and we have always looked to outperform industry growth via our network expansion, our entry into the project vertical, and lastly the large range of new products that we are getting into within the piping division. So I think whatever industry growth will be, we have constantly outpaced by 2 to 4%, and then we would like to continue that. I think industry growth typically has been around 6 to 8%, which I think should be back, and as a result, we should be trying to outpace that year on year over the medium to long term.
Absolutely. Yeah. And then secondly, we have been one of the focuses growing into newer products. So do we have any sort of data that what would be the contribution of these new products that we have launched in the last 12 to 15 months and the market acceptability for the same?
Yeah, so I think it's important to not look at this quantitatively. It has to be looked at qualitatively because a lot of these products take time. A lot of these products, we are the first movers in the market to introduce this kind of technology. So that concept selling takes time. But the initial response has been very good. So I'll maybe give you a slightly detailed answer here. So starting right from 2017, we were one of the early movers to come into the DWC double wall corrugated pipe segment used for underground drainage, where we are replacing RCC with DWC. And we have seen very good acceptance for this product, and it has started silently contributing to our overall revenue, and the potential for this product is immense going forward. And we are excited about the underground drainage vertical, and we have set up capacities accordingly over the past 3 to 4 years. Apart from that, we have come into storage tanks, which I commented on earlier, that good product acceptance about the quality and the design of the tanks, and over the long term, this will also be a growth driver for the organization. And here, tanks is more a story of concept selling and of cross-selling in our distribution network. And the last part is the modern plumbing vertical that we've recently started with the surface drainage products, as well as the low noise polypropylene drainage pipes in collaboration with German companies, which also we have started creating awareness about these products in the market, and being the first movers, it's up to us to how that we are able to concept sell these products. In the long term, this will not only contribute to our revenue, but it will heavily contribute to our profitability because the gross margin for these products is very, very strong. So it will contribute to the value-added part of our portfolio. And more important than the number part of it is this will help us create a very strong brand. Today we are already one of the leading brands in the industry, but having these kind of products really helps us focus on research and innovation, which is very, very important for any leader in any segment.
Thank you. The next question is from the line of Dhananjay Bagrodia from ASK. Please go ahead.
Congratulations pick up between our segment.
Sir, sorry to interrupt, but your audio was not
okay. Can you hear me now?
Loud enough, sir. Yes, you are loud enough.
Yeah.
Sir. Please restart.
Yeah. Hi, Nihar. Congratulations on the channel results. Wanted to ask you, in your breakup of your sales, would you have any percentage of how much would be the breakup between segmentals for your piping business?
No, we do not give out segmental revenues, but broadly, 2/3 of the business is building material, 1/3 is agri, and 2-3% is infrastructure.
Okay, 1/3 is agri. So comparatively, would you have seen in this Q3, which segment would you have seen which has grown on a higher base, considering, I'm just trying to compare between the three players and their focus areas. So which segment have you seen a good growth in between building materials and agri in Q3?
Yeah, that's a good question. I think in the December quarter, our growth has been across segments, across plumbing, SWR, and agri. So the contribution to the top line remains similar. I think as we stated in the opening remarks that our business strategy is very sustainable. We want to the agri segment we see as a way of absorbing cost, driving volume, and entering into rural markets. But the entire mind share is obviously on the plumbing and SWR segment. So this contribution to revenue for all the three verticals has broadly remained the same, and we have seen growth across segments.
Okay, sure. And my other question has been answered. Congratulations. Thank you.
Thank you.
Thank you. We have the next question from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi. Thank you for the opportunity. I just want to get a sense about channel inventory. Where was it in December? Where is the channel inventory currently?
So channel inventory in the first half of December quarter, so October, November, channel inventory was very low in anticipation of further reduction. Starting from December, as prices started to stabilize and reverse, we saw a restocking phenomena in the December month. So I believe today channel inventory is Hello?
Yeah.
I think there is some disturbance. Too much of background. Moderator?
Mr. Lahoti, are you on the line?
Yeah, I'm there. Sir, I missed it. You said channel inventory.
Line.
Is it better now?
Yes, this is much better, sir.
Yeah.
So channel inventory in October and November was extremely low in anticipation of a reduction of prices. December, as soon as prices stabilized and reversed, we saw restocking phenomena. And today, as we speak, I believe channel inventory is moderate, close to normal.
Okay. So just want to, if I see Q3 performance, is it fair to assume the growth came because of restocking? So maybe the growth in October and November would have been low single digits?
So restocking was one of the drivers for growth, but we also believe that there is genuine growth in the market because of two reasons. One is real estate is doing well, which is why building material will do well. And PVC prices had crashed, but the silver lining was because of affordability, agri also grew. So we saw restocking is one part of it, apart from genuine demand improvement in the market.
Because the reason why I'm asking you this question is that...
If you have further questions, we request you to kindly rejoin the queue.
Yeah, sure.
Thank you. The next question is from the line of Nikhil Agrawal from VT Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So I just wanted to know, what is the current run rate in the water tank business? Monthly run rate?
So I think it contributes to around 1% of our overall value today.
1% in Q3?
Correct.
Okay, and so what would be the capacity? You have a total capacity of 315,000. So how much of that is water tanks?
I would have to get back to you with that. I don't have the exact capacity. Carl would be in touch after the...
Okay, sure, I'll get back to you. And also, in your pipe segment and overall as a company, on the company level, what was the capacity utilization in Q3 and how much can it go up to going forward? I mean, at optimum utilization, how much can that be?
So, we have put up 2 new plants in Jaipur and Hyderabad in the past 3 years. And we have put up this capacity for the next 2 or 3 years. So today capacity utilization is fairly low, but our on a rated capacity of 315,000, our production capacity can go up to 230 to 240 KT per annum.
Okay, and so you have no capex plans as such right now. Going for the next capex.
So right now we are debottlenecking existing facilities, and the focus in this current financial year has been on maintenance and debottlenecking.
Okay, sir. That's it from me. I'll get back in with you. Thank you.
Thank you. The next question is from the line of Sandesh Barmecha from Haitong Securities. Please go ahead.
Thank you for the opportunity, sir. So first question, how much CPVC contributed on volume terms and on value terms?
We don't give out segmental data, as you're aware, but broadly, CPVC contributes to around 20% of the revenue.
Okay. So what will be our full year guidance, capex guidance, sir, for this year?
The guidance for
capex, sir.
So 9 months we have already done 80 crores. We have capitalized this fiscal, and around 20-25 is what we'll be expecting in Q4.
Okay, great. Thank you so much, sir. Good day.
Thank you. The next question is from the line of Archana Gude from IDBI Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, overall, what kind of growth we should look at for, let's say, next 3 years down the line? And, more, if you can give some color on how we should look at the margins in the sanitaryware business going forward?
Yeah, I think the next 2 to 3 years, As an organization, we are growth hungry, and we have put up the capacities, to take advantage of any such uptrends in demand. And I believe, the past 5 years, all the growth that came because of market consolidation. The top 3 or 4 players like us grew mainly because of a consolidating market environment, from the unorganized to the organized, and within the organized also the big were getting bigger. This was despite a weak real estate segment. However, over the next 3 to 4 years, I believe consolidation will continue to take place, but we will have the tailwinds of a strong real estate market, coupled with affordability of PVC prices, which will bode well for the agri segment as well. So the confluence of these factors, these 3 factors, makes me optimistic about growth over the next 3 years. And the sanitaryware business, I think we would be able to give exact guidances on revenue and margin once we officially launch.
Sure, sir. And sir, just one more bookkeeping question. There has been 14% decline in other expenses in this quarter. Was there any one-off, or what exactly has been going there?
I think we should be a one-off, nothing sustainable. So just a one-off, nothing specific.
Sure. And any guidance on ad spends going forward?
I think specific guidance on expenses, I think the main discretionary expenditures for are obviously manpower and advertising, which I think will continue.
So should we take that 2 to 3% of your top line for ad spend?
I think 1.5 to 2% on ad spends will sustain.
Sure, sir. Thank you so much.
Thank you. The next question is from the line of Sujit Jain from ASK. Please go ahead.
If I look at the working capital situation, compared to March quarter, March 22, inventory has gone up, and so have, I think, receivables. Overall working capital days, if I normalize the payable days, which have increased, would have gone up.
Okay.
So if you can just explain, would it be in line with the inventory you would want to keep for the upcoming season, or how is it panning out basically?
I think every quarter this would be dynamic. So I don't think we can take March 22 as a benchmark for working capital for all quarters. But I think 60 days is an inventory that we have always guided. 60, 65 days is a very normal level of inventory for this industry. So I think that will continue. And receivables, I think, as we mentioned in the earlier on the call, also the focus is on receivables. Clearly, we acknowledge that there is scope for improvement. We have come a long way from 70, 75 days of better days that we had, which has come down to 48 days, over the past 2-3 years. This, you cannot have overnight reduction because we are still a growth-oriented organization. But I think in the next 2 to 3 years, I would like to see receivables come closer to the 30-day mark and more in line with the industry. So today, the kind of brand that we've built, I think we need to leverage our brand equity that we've built by tightening our receivables. It will not happen overnight, but I'm confident in the next 2 years we should see a significant improvement in the receivables days.
Sure. And the 2 technology tie-ups that you've just spoken about, German tie-ups and launch of 2 products, any details about royalty payments, then how does this work?
There is no royalty payments. Initially, it's a trading model. We will start with a trading model, and as volumes pick up, we are open to local manufacturing as well. But the initial days, the hard work we need to put in to really concept sell these products. So, for example, the surface drainage products of Horaton, we are replacing cast iron and RCC surface drainage channels. So the same way we replaced cement pipes to DWC pipes, the first 2 to 3 years, were very, very painful, and it looked like we were sitting on a very low capacity utilization. But eventually, all conventional products like steel and cement will move to polymer products because of better product life cycles and more user-friendly, high-performance products. So the way we have done with DWC, now we want to create these pockets within piping, newer applications where we replace conventionally used products with polymer products, and we have to do the concept selling. So first 2 to 3 years will be really challenging, but that's what we like. We like the challenge because that helps us cement ourselves to become synonymous with that product, an established category leader. And this will not only contribute to revenue, but because of the better gross margins, once we start in-house manufacturing, there is immense potential for contribution at the earnings level as well.
And one quick question is that buildings you have this SWR for drainage pipes, and surface drainage is meaning overall drainage system. Is that the correct understanding?
So surface drainage is basically helps the storm water or the rain water to exit a project. It is the surface, the channels that we see of RCC in our buildings, residential and commercial buildings today, that we are replacing with 100% recycled polypropylene surface drainage products. So, would be happy to share some product pictures with you. It's also available on our website. But it's a surface drainage channel.
Perfect. Sure. Thank you and all the best.
Yes, sir.
Thank you. The next question is from the line of Praveen Sahay from PL India. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So, first question is related to the plumbing. How is the project versus the retail contribution?
So we are retail driven today and heavily indexed towards the retail. So I think it would be like a 75 retail and 25 project split. Because we've built out the project vertical only in the past 2 years with a separate project head and a entire project team. So the progress that we have made in the past 2 years has been immense. And I think we are already heavily skewed towards retail, but project segment will now help us drive the next level of growth over the next 2 to 3 years. It's a very different kind of business than retail. Retail is more distribution network driven. Project is more relationship driven, the relationships that we are able to build across builders, contractors, consultants across the country. And we have made a lot of strides in the past 2 years. And I think going forward, we should see a better contribution from the project segment. And I think the timing of this has been opportune as the real estate segment is doing well. So as an organization, we are excited about the potential of the projects division over the next 2 to 3 years.
Okay, and the next question is related to the plumbing mix of PVC and CPVC. So PVC prices has down significantly. So is that impacting your CPVC performance?
What do you mean?
So in the plumbing segment, you sell PVC and the CPVC both. So now the PVC prices were down, PVC pipes and fitting prices were corrected. So is that some way impacting the CPVC?
So we have not seen anything like that. I think CPVC continues to be 20 to 25% of the business. We are growing in CPVC for the year. For the 9-month period, we have a double-digit growth in CPVC, because what you must understand is CPVC is used for a very niche application, which is hot and cold water plumbing. It's today only a 4,000-5,000 crore market versus PVC, which is obviously a 30,000 crore market. Because PVC is much more versatile, can be used for agri, SWR, as well as cold water plumbing. So CPVC, while can only be used for hot and cold water plumbing. So I don't see much cannibalization happening across the polymers.
Okay. Last question, sir, related to your capacity. You said 315,000 post this expansion in both the plants.
Yeah.
Okay, and that will be the year-end number.
Yes. Yes.
Okay. Thank you, sir. Thank you for taking my question. All the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and one on your touchtone phones. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Sir, as you said, the project division is expected to grow at a higher rate. Will it be fair to assume you will have a lower margin in project division, so overall your margin could be decreased because of that?
No, I don't see this challenge because you're right. Of course, project pricing for the entire industry, all across any industry, projects usually tend to be, more aggressive on pricing. However, this is compensated by two things. One is the product mix tends to be better towards plumbing, specifically CPVC. So this helps partially offset the aggressive pricing at the gross margin level because of the superior product mix relative to our product mix overall. And at an operating margin level, the volumes in the project business are lucrative. So from a cost absorption point of view, I think it almost evens out. So at an operating margin level, there is not a significant difference in the project and retail business.
Got it. Can you give some sense what would be your current margin difference between the project and retail?
So like I said, there is not a significant difference at the operating margin level. So it's not very material.
Okay. One last question from my side. What would be the margin you would be making in agri and plumbing? A broader range. I'm not looking at the exact number.
Yeah, because you're aware we don't give segmental breakup for revenue and margin, but I understand what you're asking. Plumbing margin is superior compared to agri. Plumbing is more value driven, brand driven, and agri is more volume driven and price driven.
Okay. Got it. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Arun Baid from ICICI Securities. Please go ahead.
There are just one question here. If you look at your EBITDA per kg in this quarter, which came in about 15.5 rupees, 15.9 rupees, and as you said, the inventory loss would be in the range of 20-25 crores. So if I take 20 crores, EBITDA per kg ballpark would be about 20 rupees 50 paisa. What I'm trying to ask is that the normalized margin we should look at? Forget about inventory gains, which might have losses, but normalized, assuming things being normal, is that the range we should look at going ahead?
So, as you're aware, we don't really give guidances on EBITDA per kg. Of course, there has been an improvement quarter on quarter as the prices improve. But I think, on a long-term basis, 12 to 14% EBITDA margin is something which is sustainable with, obviously healthy volume growth.
Yeah, the only catch here is, when you say 12 to 14%, we don't know what the PVC prices would be. So that's the catch there, right? Because if I assume the PVC prices, like for example, in this quarter, your PVC realization was roughly 161 rupees, 162 rupees, your blended realization, which is obviously lower compared to quarter because you had lower prices in between the quarter. Now, so the point is, if you look at today's realization, which would be higher because PVC prices have gone up from what the lows was, then your number changes dramatically, 12 to 14%. So what I'm ballpark trying to get to is that at 12-14% actually that's lowest? So is the EBITDA per kg which we are seeing normalized? Is my calculation really correct? I'm not asking you to give a guidance, but is that the way we should look at it?
Yeah, so you're right. I'll stay away from giving a guidance, but your calculation is accurate.
Right.
Thank you.
Thank you. The next question is from the line of Nikhil Agrawal from VT Capital. Please go ahead.
Good evening, sir. Thank you again. So I wanted to know, your 9-month CPVC volume growth, if you could quantify it.
We have seen double-digit growth in CPVC in the 9 months.
Okay. In the first half, you had mentioned 25% growth, so it's been around the same levels.
I'm sorry?
So in your Q2 call, you had mentioned that CPVC volume growth has been around 25% in the first half. So has it been around the same levels, or has there been some tapering off or anything?
So we have seen double-digit growth in the December number. I don't have the exact number with me, but in December we have seen double-digit growth, and for the 9-month period as well, we have seen double-digit growth.
Okay, great. And so what would be the price trend? Any major changes in the CPVC prices?
No, I think CPVC prices continue to remain stable.
Okay, great. That's it from me. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you to all for attending our call. Thank you.
Thank you very much. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.